Well, the top story this evening, in a surprising move, the RBI's Monetary Policy Committee has decided to cut the key policy rates by 25 basis points. This was the first policy decision under Governor Sangita Das and the first rate cut since August 2017. 4 members of the MPC voted in favour of the rate cut, including the new governor and the usually hawkish executive director at the RBI, Michael Patra, Deputy Governor Viralacharya and MPC member Chetan Ghate voted for a status quo. However, the MPC voted unanimously to change the policy stance from calibrated tightening to neutral. The main reason for the rate cut is the RBI's benign inflation outlook. According to the central bank, prices of food items continue to surprise on the downside, and even electricity prices are showing moderation. So the inflation forecast for the first half of the upcoming financial year has seen a sharp cut from about 4% to just above 3%. The RBI expects the economy to grow at 7.4% in FY20, and it expects growth to remain just over 7% in the first half and accelerate to 7.5% by the year end. However, the central bank did raise a lot of red flags. The governor pointed to a slowdown in investment demand in the third quarter of this financial year. He also underlined that credit flow is slowing and there is moderation of activity even in the services sector. On agriculture, the governor said that the rabi sowing has been tepid. He expects total farm output to decelerate in FY19. Here are the highlights from the governor's press conference.
The shift in stance of monetary policy from calibrated tightening to neutral also provides flexibility and the room to address the challenges to sustain growth of Indian economy over coming months, as long as the inflation outlook remains benign. The decisions of MPC in this regard will be data driven and in consonance with the primary objective of monetary policy to maintain price stability while keeping in mind the objective of growth. More recent high-frequency indicators point to investment demand losing some pace in the third quarter of 2018-19, while credit flows to industry remain muted. Survey-based indicators point to weakening of demand conditions in the manufacturing sector. High-frequency indicators of services sector suggest some moderation in the pace of activity.
Well, that's Sangita Das making his debut with the monetary policy. Now, the RBI also made it easier for banks to lend to non-bank finance companies which have been struggling for liquidity since the IL&FS crisis. The rules governing risk weights for bank exposure to NBFCs have been revised. From now, the risk weight will be linked to ratings, and new rules on harmonizing the different types of NBFCs will be issued by the end of the month. But HDFC Chairman Deepak Parekh does not expect lending rates to fall further. Here's his rationale.
The rates were already low. The margins had been really squeezed, and with the with non-performing loans shaping up and coming up, I think banks and NBFCs need to keep a larger margin for protection. So it's not possible for, because of heavy competition, the rates were wafer thin. And these kinds of wafer thin margins are just not viable today because stressed assets come up any time and you need larger profits to make provisions for. So part of it, the rate may be passed on, part of it is already factored in.
Well, that's Deepak Parekh saying that we're unlikely to see a change as far as lending rates are concerned. Joining us to discuss this further, Sangita Reddy, Senior Vice President of the Federation of Indian Chambers of Commerce of FICCI. Sangita, thanks very much. Ahead of the MPC, the demand both from CII and FICCI was for a 100 basis point rate cut from the Reserve Bank, which was a tall ask anyway, but 25 basis points has happened. Is this really going to change the needle in any way?
So I think more than the actual reduction, it's an indication of a trajectory, and that's what we're looking at. That we believe that it's not just the 25 basis points cut in the repo rate, but it's also the change in the rating, the calibrated tightening to neutral. All these are signals, and it's important for us to note that the monetary policy of the country should complement the fiscal policy. And in the fiscal policy, the biggest need of this country and the economy is for us to generate consumption, demand and investments. So I think this is the beginning of a trajectory. It is industry's hope that this repo rate will be cut further, that interest rates will be further rationalized, because we have to enhance liquidity, boost consumption and investment. And ultimately, these are critical steps towards generating jobs. So very, very simplistically, the monetary rate has to match the monetary policy has to match the fiscal policy, and this is the need of the country.
Well, the fiscal policy has provided a stimulus, and the monetary policy today has aided that effort as well. But Sangita, you know what we heard from the governor, the red flags that he's raised when it comes to when he talks about growth. Investment demand has declined in Q3. Rabi sowing has also been rather tepid in comparison to year-on-year as of today. Secondly, there is a slowdown even as far as the services sector is concerned. What is the sense in industry now? In terms of business confidence, in terms of putting fresh money to work, or is the cost of capital too high and demand still muted?
So clearly the cost of capital is high. I think also it's important to note that the CPI has, also undershot on its targets. So if we look at that, the consumer price index, if we look at the consumption, all these are indications, and at the same time, the global markets are also not looking very aggressive or active. So I believe steps need to be taken to avert a potential crisis, and this is a significantly good step, which is hopefully a trajectory, and there should be more to come in a similar direction. I think industry will respond to this change appropriately, and this will be something which will signal an acceleration in the economy.
Okay, my final question to you, Sangita, on the back of what we heard in the budget with the fiscal stimulus and now with the monetary policy, are you getting signs that we are perhaps going to see an uptick as far as demand is concerned? Is there any indication of consumption starting to move higher?
I believe that there will be an uptick in consumption because clearly each of these policies or subsidies have put money into individuals' hands. Whether it was the agricultural subsidy or the tax change, all these put money into people's hands. They should promote consumption. A combination of enhanced consumption with better industry policy and lower interest rate should do the trick. And
well, let's hope that it does do the trick. Sangita Reddy.
Put together.
Okay. All right. Sangita Reddy, the Vice President of FICCI, joining us today to discuss the implications of the rate cut announced by the MPC. Thanks very much, Sangita, for joining us. Well, India has jumped 8 places on the US Chamber of Commerce's annual International Intellectual Property Index. The report analyzes IP climate across 50 world economies based on 45 indicators critical to an innovation-led economy. India currently ranks 36. So what worked in our favor? Well, better adherence to copyright protection norms, strong awareness against piracy may have tilted the scale in India's favor, but a lot remains to be done. Patrick Kilbride, Senior Vice President of Global Innovation Policy Center at the US Chamber of Commerce, joins us now. Patrick, many thanks for joining us here on CNBC-TV18. Good to have you back. You and I have had this chat several times in the past, every time you put out this index. And the quibble here in India has been that the US Chamber of Commerce has treated India unfairly when it comes to the IP index. But finally, there is an acknowledgement that things have changed, and hence India's up 8 places. What made you change this rating?
Good evening, Shireen, and thank you for having me back. We didn't do anything to change this ranking. Really, it's all the things that have happened in India that are positioning the country to take advantage of a global knowledge economy and to be a real leader in the innovative and creative sector. So as you mentioned, we've seen new commitments to participating in international treaties, such as the WIPO Internet Treaty, that allows Indian artists and creators to take advantage of the e-commerce space without being subject to rampant piracy. It has implemented government-wide intellectual property enforcement efforts. And these are all part of a growing, I think, political will to put India at the forefront of the knowledge economy that was reflected in the 2016 National IPR policy. And it took a couple years, but now we're seeing real traction and momentum from that policy, and the results are apparent in the index that we released today.
Okay, so you're saying that the policy that was put in place in 2016 is now translating into action, which is being reflected in the index. But which are the changes or which are the indicators of the 45 indicators that you measure where you've seen the most significant difference when it comes to India?
So the interesting thing to reflect on is that, this is the 7th edition of the U.S. Chamber International IP Index. And our index has grown along with India's position in the space. So at the same time that India was taking on important reforms related to empowering domestic innovators and creators, the Chamber's index was growing and expanding both in terms of its country coverage and its and the scope of the laws and regulations that it covers. So in 2012, when we first put this out, India was one of 11 countries ranked, and maybe not surprisingly, was the last of 11 because it was being compared to the likes of Japan and the United Kingdom and the United States. Over time, as we've been able to expand the country coverage of the index, we're able to draw more useful analysis to understand better how the policy decisions that India is making related to IP compared to those of more of its peers. For instance, Brazil, Russia, China, South Africa, for instance. And that has really made it a much more useful tool. The other thing that we've done, and really very specifically, I think, in response to the conversations we've had in India with Indian stakeholders, is that we've built into the indicators, and you mentioned there were 45 this year, up from 25 in the first edition in 2012. So we've been able to build in some of the foundational architecture that allows countries to empower their domestic innovators and creators. India, especially in the last 2 years with its implementation of the national IPR policy, has done well on those new indicators, and that's been reflected in the score.
Okay, very quickly, Patrick, before I let you go, so the areas where more work needs to be done, according to the survey?
What innovators need, it doesn't matter if you're a foreign investor or an Indian startup. What you need to make a risky investment, a costly investment, an innovation that may or may not work, is a reliable patent on the back end or a copyright if you're a filmmaker, that you can say, all right, if I get this right, and I'm taking a risk, but if I get it right, I can get a return on my investment. What we're looking for more than anything is certainty. In the patent space, you see that in patent eligibility rules that remain ambiguous. In the copyright space, it's the availability of clear statutory damages. So what we need is that political will that says, yes, we've got this momentum from the 2016 policy, and we are committed as a nation to carrying this forward because we believe that India wins if we are at the forefront of the knowledge economy. So there's a number of specific changes that can take place, but what we really need to see is the political will to say India is going to be the leader in the global innovation economy.
All right, Patrick, we'll leave it there. Thanks very much for joining us here on CNBC-TV18 with the results of the Intellectual Property Index, Global IP Index put out by the U.S. Chamber of Commerce. India up 8 spots. With that, it's time for us to wrap up this edition of What's Hot. Don't go anywhere. Markets today takes the market action forward. The Lal Street soaring soon after the RBI's policy, but then profit booking wiping out those gains. The Sensex and the Nifty ending flat. I'll see you again in 30 on India Business Hour.